Somewhere right now, someone is becoming a millionaire from crypto. And somewhere else, someone is losing everything because of it. So what is the truth? What is crypto really? And should you put any money into it? In this video, I am going to break it all down. No hype, no panic. Just the honest, clear truth about what crypto is, how it works, who is really making money from it, and whether it belongs in your financial plan. Stay until the end, because the last section is the one most people never hear, and it is the one that will actually help you make a smart decision. Let us start at the very beginning. What actually is cryptocurrency? The word breaks down simply. Crypto means secret or hidden. It refers to cryptography, the technology used to secure it. Currency means money. So cryptocurrency is digital money secured by complex code. But why was it created? In 2008, the global financial system almost collapsed. Banks had made reckless decisions. Governments had to bail them out using taxpayer money. Millions of ordinary people lost their savings, their jobs, and their homes. And no banker went to prison. In response to that crisis, a mysterious person or group known only as Satoshi Nakamoto published a document describing a new kind of money. Money that no bank could control. Money that no government could print more of. Money that ran on math and code, not on trust in institutions. That document became Bitcoin, the first cryptocurrency. And it introduced an idea that changed finance forever. What if money could exist without a middleman? Here is where most videos lose people, but I'm going to make it simple. Traditional money works like this. You have a bank. The bank keeps a ledger, a record of who has what. When you send money, the bank updates its ledger. The bank is the referee. The bank has all the power. Crypto works differently. Instead of one central ledger held by one bank, there are thousands of copies of the same ledger held by thousands of computers around the world simultaneously. This is called the blockchain. Every transaction that ever happens is recorded on this blockchain and verified by thousands of computers at once. To fake or change a transaction, you would need to change it on more than half of those thousands of computers simultaneously, which is virtually impossible. This is what makes crypto secure without a bank. Mining is the process by which new transactions get added to the blockchain. Powerful computers compete to solve complex mathematical puzzles. The winner adds the next block of transactions and is rewarded with new cryptocurrency. This is how new Bitcoin enters circulation, not from a printing press, but from math. Bitcoin has a hard limit of 21 million coins that will ever exist. That limit is written into the code. No government, no company, no person can change it. This is fundamentally different from regular money, which governments can print in unlimited quantities, which is exactly what causes inflation. Most people think crypto means Bitcoin, but there are thousands of cryptocurrencies. Some are legitimate projects. Some are experiments. Some are outright scams. Let me walk you through the main categories. Bitcoin is the original. It is the most trusted, the most established, and the most widely held. It is what most serious investors refer to when they talk about crypto as a long-term store of value. Think of it like digital gold. Ethereum is the second largest, but it was built for a different purpose. While Bitcoin is mainly a currency, Ethereum is a platform, a system that allows developers to build applications on top of it. Smart contracts, decentralized finance, digital ownership of assets, all of these run primarily on Ethereum. Then there are altcoins, the thousands of other cryptocurrencies. Some solve real problems. Stablecoins like USDC are pegged to the dollar and used for fast international transfers. Chainlink connects blockchains to real-world data. Solana processes transactions faster than Ethereum at lower cost. And then there are memecoins. Dogecoin, Shiba Inu, coins created as jokes. That became worth billions purely from hype and social media attention. Some people became rich from them. Far more people lost money chasing them after the hype peaked. The honest truth is this: out of the thousands of cryptocurrencies that have been created, the majority have failed, lost almost all their value, or simply disappeared. The few that survived and grew are the ones with real technology, real use cases, and real communities behind them. Let us talk about what can go wrong, because this is the part most crypto influencers skip. And it is the part you absolutely need to hear before you put a single shilling into this market. Risk number 1, extreme volatility. Bitcoin has dropped 80% in value multiple times. In 2022 alone, the entire crypto market lost over $2 trillion in value. If you invested $10,000 at the peak and needed that money 6 months later, you might have had $2,000. Volatility is not a feature. It is a warning. Risk number 2, scams are everywhere. Crypto has attracted more fraud than almost any other financial market in history. Rug pulls, where developers launch a coin, attract investors, then drain all the money and disappear. Fake exchanges. Phishing attacks that steal your wallet. Pump and dump schemes that target people who do not know better. Risk number 3, no safety net. When a bank fails, many countries have deposit insurance that protects your savings. If a crypto exchange fails or gets hacked, and several major ones have, your money is usually gone. There is no government insurance. There is no customer service to call. If it is gone, it is gone. Risk number 4, regulation uncertainty. Governments around the world are still deciding how to treat crypto. Some countries have banned it. Others are building frameworks around it. A major regulatory decision can crash or boost the market overnight. This adds a layer of risk that stocks and real estate do not have. Now for the other side. Because crypto, for all its risk, has also created more wealth more quickly than almost anything in financial history. And understanding why that happened is important, even if you never buy a single coin. Bitcoin went from essentially zero in 2009 to over $60,000 per coin in 2021. Someone who invested $1,000 in Bitcoin in 2015 had over $50,000 by 2020 without doing anything else. That kind of return does not exist anywhere else in traditional finance. Serious investors, including some of the world's largest asset managers, now hold Bitcoin as a small portion of diversified portfolios. They do not treat it as a get-rich-quick scheme. They treat it as an asymmetric bet. A small amount that could multiply dramatically, with the understanding that it could also go to zero. Ethereum's ecosystem has given birth to entirely new financial systems. DeFi, decentralized finance, allows people to lend, borrow, and earn interest on their money without a bank. In countries where banking access is limited, this is revolutionary. You only need a phone and an internet connection. NFTs, non-fungible tokens, were another crypto application that briefly exploded. Digital art, music, and collectibles being sold for millions. Most of that market has cooled significantly. But the underlying technology, the idea of verifiable digital ownership, has real long-term applications. This is the question everyone actually wants answered. Should you invest in crypto? Here is the honest answer. It depends on where you are in your financial journey. If you have high-interest debt, credit cards, personal loans, anything above 10%, pay that off first. No investment in crypto has a guaranteed return. Your debt does have a guaranteed cost. Clear the debt before you speculate. If you do not have an emergency fund, money to cover 3 to 6 months of expenses, build that first. Crypto can drop 50% in 3 months. If that happens and you need money urgently, you are forced to sell at the worst possible time. If you have those foundations in place, here is the framework most serious investors use. Never put more than 5 to 10% of your investable money into higher-risk assets like crypto. Only invest money you could lose completely without it changing your life. Do not invest money you need in the next 2 to 3 years. If you do invest, stick to the 2 most established options, Bitcoin and Ethereum. Avoid chasing the latest coins promoted by influencers. The coins that get promoted loudly on social media are usually the ones where someone is trying to get you to buy so they can sell. Dollar cost averaging is the safest approach. Instead of putting everything in at once, you invest a fixed small amount every week or month, regardless of price. This removes the impossible task of trying to time the market. Over time, you automatically buy more when prices are low and less when they are high. Security matters more than most beginners realize. Use a reputable exchange. Enable two-factor authentication. For any serious amount, consider a hardware wallet, a physical device that stores your crypto offline, away from hackers. The phrase, "not your keys, not your coins," means if the exchange holds your crypto, they control it. Here is something that does not get enough attention in Western financial media. In many parts of Africa, crypto is not a speculation. It is a solution. Cross-border remittances, sending money home to family, can cost 10 to 15% in traditional fees. With crypto, that same transfer can cost under 1% and arrive in minutes. In countries with unstable local currencies and high inflation, holding a portion of savings in Bitcoin has protected some people's purchasing power in ways that a local savings account simply could not. This is not universal advice, but it is context that matters. Tanzania, like most East African nations, is navigating its own relationship with crypto. Mobile money has already transformed access to financial services here. Crypto is the next conversation. Understanding it now, before it becomes mainstream, puts you ahead of the curve. Let me bring this all together. Crypto is real. The technology behind it is real. The wealth that has been created from it is real. But so are the losses, the scams, and the volatility. This is not a world where everyone wins. The people who have done well with crypto treated it with respect. They understood what they were buying. They only risked what they could lose. They did not follow hype. They bought when others were fearful and held through volatility. They secured their assets properly. The people who lost did the opposite. They bought because someone told them to. They invested money they could not afford to lose. They panicked and sold at the bottom. They were chasing profit instead of seeking understanding. Knowledge is the real asset here, not the coin. If this video gave you a clearer picture of what crypto actually is, share it with someone who is being pressured to invest without understanding it first. You could be saving them from a serious mistake. Subscribe to WealthWhisper. We cover the truth about money that schools, banks, and influencers never tell you. One secret at a time. See you in the next one.